Time for the Word on Wall Street. Top investors watching your money. Joining me right now, the Watchdog on Wall Street radio show host and Markowski Investments president, Chris Markowski, Payne Capital Management president, Ryan Payne, and former Gartman letter editor and the University of Akron Endowment Fund chairman. He is North Carolina State Endowment Committee member Dennis Gartman. Great to see everybody this morning, gentlemen. Thanks so much for being here. Kicking it off with you, Dennis. I want to look at the bond market and see what yields are telling us now. Suddenly, I'm hearing the word recession more and more. This is a measure of growth causing concern on Wall Street as we look ahead to the Federal Reserve meeting next week. The 10-year now at 1.628%, lowest level in about a week. As you can see, down 0.7 of a basis point. Dennis, what do you think markets are telling us about the broad economy as the Atlanta Fed takes its expectations for the economic story lower?
I've been bullish of the economy for a long period of time, but clearly things are beginning to slow down at the margin. I don't think there's any question about that. The data that's coming out in the past several weeks has been less optimistic than we've seen over the course of the previous several months. For the first time in a long while, I've actually turned bullish of the bond market. My good friend Luis Yamada sent me an interesting chart last week detailing the overwhelming, one-sided, enormous bearishness that exists in the bond market. I've never seen this sort of one-sided tilting of the boat to 1 degree as we've seen in the bond market in the past month and a half or 2 months. And over the past several years, when we've gotten to these levels previously, we've seen enormous rallies in the bond market. With the yields on the 10-year at 1.62, the value of an 0.1, the price movement of a 1 basis point move in yields can be rather large. And I think we can take the 10-year back from 162, 163, 164 to 135 or 136. That'll be beneficial to the high-tech stock market. But it's going to be something to behold, I think, in the bond market. I think we get a good, strong rally. 4 years from now, the 10-year will be at 4%, but 2 months from now, the 10-year could be at 1.35, and that'll give us a reason for a blow-off to the upside in stock prices.
Well, listen, I'm really glad you mentioned Louise Yamada. I love Louise Yamada. I always used to talk to her. Please send her my best regards. But the bottom line question here is this slowdown in economic growth going to change the Fed in a week?
Probably not. I think the Fed has already told us what they intend to do. There's no question about whether they start the tapering process at the November meeting or whether they start in the December meeting. They've told us they're going to start it eventually. That's going to happen. It'll be over by the end of next year. I think the Fed has set its path. I think we're set for what they've already told us. No question. There won't be any major changes.
Ryan, how about big tech takes a front seat tonight, earnings tonight, as well as this week? Facebook reported last night. We're expecting earnings tonight from Microsoft, Twitter, Alphabet, Texas Instruments, Advanced Micro Devices. What's your take on the Facebook quarter and any expectations for the big Tuesday tech night tonight for earnings?
I think it's going to be a little disappointing. I think if you look at tech right now specifically, they've got a lot of headwinds here, Maria. We saw this with Facebook last night. They missed on revenue, and they had this new privacy policy on Apple's platform, which really did hurt their advertising. We saw Snap last week had the same problem. So the stock's up a little bit this morning, but it got whacked last Friday. And if you look at all the big 5 mega tech stocks right now, besides Microsoft, they're all trading off their all-time record highs. And you have supply chain issues. If you're Amazon, if you're Apple, you've got the whole chip shortage. I think rates are going higher here, Dennis. I just respectfully disagree with you on that. And I think that that inflationary pressure is going to be a problem here. So I think of any sector right now, I think tech's the one you have to be most concerned about. Now, I'll say this, though, as a caveat. I am wildly bullish. I've been saying this every single week, and we've seen profits this quarter. They're phenomenal. And you're seeing those supply chain issues, and you're seeing that right now companies do have more overhead, but they're passing on to the consumer, you and me, those price hikes. And we're gladly taking those price hikes, which is kind of like a magical time in the economy here. So I think, be extremely bullish here, but I think tech specifically is the one place that you're going to see a little bit of trouble this quarter.
So in other words, Ryan, if I see a sell-off in some of these chip makers, like a Texas Instruments, like an AMD, after what we saw in Intel, are you a buyer on weakness in tech?
I think you can be here because I think you can buy anything here because I do think money's going to keep funneling to the market. But as a long-term play, I do think valuations are relatively high in tech. So spread it out. Buy some energy. Buy some financials, right? Cyclicals.
Got it. Chris, let's talk macro for a second. We're facing an ongoing labor shortage. According to the Bureau of Labor Statistics, for every unemployed worker in Kentucky, there are roughly 2 open jobs, as the Denver International Airport faced a disappointing turnout at a recent jobs fair. The executives at this jobs fair, they were expecting 5,000 people to show up. 100 people showed up, Chris. Your thoughts on what's behind this?
Maria, you're familiar with restaurants. I know you used to work in one a long time ago. Me too. You go out to restaurants nowadays, you almost feel bad for the staff there. You look around, you're like, oh, my Lord, there's only one server here and one busboy. I think what we're going to see, again, the American economy is resilient, and necessity is the mother of invention. I think you're going to continue to see more and more robotics. I think you're going to see more and more companies look to automate things. But again, certain things like airports where you're going to need to have TSA workers, it's a pain in the neck now. Anybody trying to go through an airport, you got better get there early because the lines are long.
Yeah, well, I was the coat check girl at the Rex Manor, and so far I have not seen any technology to replace the coat check person at restaurants, because you have to care for those coats and you have to be, make sure you're courteous to the people giving you the coat. So I understand what you're saying in terms of burger flippers and things like that, but so far we haven't seen technology replace the coat check girl, which is who I was at the Rex Manor. We'll see. We'll watch that. Chris, thanks very much. Chris Markowski, Ryan Payne, Dennis Gartman. Great to see you, gentlemen. Have a good Tuesday.